Hi everyone, hope you're all doing well. Today I thought I'd talk about some of the stocks that are very high up on my watch list right now because, as you know, loads of stocks have taken nosedives and that has created massive opportunities in the market. And I'm going to talk about ones that I don't own but I am watching very closely and I could see as opportunities where I buy them. Some obviously a lot closer than other ones, and to be honest with you, if it wasn't for the whole market absolutely tanking, and I already have plenty of stocks to be buying. If it was any other time, a lot of these stocks I would have bought them. But it's just one of those where there's so many opportunities, but a lot of little money at the time to be buying because I'm flooding it into stocks that I already own. But these are some that are very close to me actually buying. So hope you enjoyed the video. Thought I'd do something a little bit different today and just talk about some stocks that I actually don't own, but I do really like. So getting on to number one, I think there's 5 stocks on this list. The number one is Lovesac. So this is very much near 52-week lows, as you can see here. The 52 low was $19. It's currently $20. And this stock peaked out around about $83, and since then it's down 75%. It's a 311 million market cap company, so it falls in that category of small caps. And as you guys know from yesterday's video, I do really believe the opportunity right now in the market is very much with mid caps and small caps, and this very much comes under that small cap category. The small cap category has been massively killed off, and you're getting valuations at the levels they were at in the 2008 crash, and some of these businesses don't deserve to be at them sort of levels, and this is one of them. Trades at 7 times earnings, and their recent earnings were very impressive. Now the crazy thing with Lovesac is they come out with these really good numbers, and these shares actually went down 12% on the day. Now they said that, analysts didn't really like that there was slower comp sales growth, but that's going to happen. Lovesac has had an amazing period of time. People have been at home, a lot of spare money, been upgrading or upcycling their furniture. And there is going to be some form of slowdown on Lovesac as well as the stores reopening. However, still, with all that considered, these financials were impressive. Let's not forget, this is a company trading at 7 times earnings. And they came out with EPS, which was a beat by 0.04. Its revenue increased 55% year over year, which also beat expectations by 17 million. This is off 148 million. Now there was a little bit of gross margins impact, as you would expect with what's going on in the world at the moment. However, when you consider there was a little bit of gross margins impact, they still put in a massive EPS beat and massive year over year growth. And this is all while this business trades at 7 times earnings. Now I have actually on the Patreon, we actually did this as we do a stock request. So basically every week, everyone on that Discord can throw stocks into the stock request. We have a vote, and the top 3 stocks for that week win. And I will do a few minute deep dive onto them stocks. And one week was Lovesac, and I actually had the biggest deep dive I have had on Lovesac during that video. And the things that I found in there were also insanely positive. Like the repeat customers are like 41%, so people are coming and buying a couch from Lovesac, and you would say that isn't really a repeat business, but because people are kind of able to upgrade the furniture with adding more sofas onto them, or potentially having new covers on the sofa, people are loving having to refresh, rejig the furniture, and also that sustainability as well, which is just absolutely amazing. And there's not many stores out there, and the more they add stores, it should be very good. I was really impressed with Lovesac's financials. Like, even at 7 times earnings, if this business was growing like 10% a year, I'd be like, that's actually pretty good. But the fact that this is growing at these rates, it's just absolutely insane. So Lovesac is number 1 on this list for sure. I am pretty much every week thinking about pulling the trigger on this one, because I just think that this valuation for this business is just absolutely crazy. So this is definitely number 1 on my list. Next one is Fiverr. So I've been oohing and ahhing about Fiverr for months. You guys will know. I've been saying like, oh, if Fiverr gets to like $50, I'll probably buy it. And then it gets to 50 and like everything else is coming down. I'm like, no. $40, and then it gets to $40 and like, no, I buy every other opportunity actually still at the moment. And then it's now down at $32. And I'm like, at some point I've got to buy Fiverr. So, I mean, Upwork is very similar. Personally for me, I do prefer Fiverr a little bit more than Upwork. Fiverr is personally for me the platform that I use as well. So I think it's a great platform. Basically, it's an online marketplace for freelance services. I think freelance services are going to grow massively they've had a massive boom because of the CV situation, and I think that's really encouraged it. From a business point of view, let's not hire someone full time to do this role. If we only need them 3 days a week, let's go to Fiverr and get someone to do that work. Or workers themselves are thinking, you know what, I don't want to work the 5-day working week anymore. I want to be more selective about which work I take on, who I work for. I can be more selective on my pay as well. I can basically say, for this job it's so-and-so, for this job it's so-and-so. And I think this just suits everyone. I think this is a massive area in the next 5-10 years is where businesses have the choice to take people on just for the work they need, and for workers to have more control over the work that they're taking on. And I think the CV situation obviously helped it, as you've seen the boom in the revenue, carry on. And it's going to go through a bit of a slower phase at the moment. I think this still has massive growth in the next few years. And the thing is the share price basically is now putting it towards pre-CV levels, even though the financial explosion has been insane. Now, the only thing that does put me off a little bit with Fiverr is they don't make profit. However, the gross margins are very, very good. So they could probably get to profitability if they weren't spending so much on marketing. But that's the only little thing that puts me off. But the valuation has dropped huge. Like when we look at October 2021, this was a business trading at 24 times sales. It's now trading at 3 times sales. So I mean that's massively dropped off. With Fiverr, I mean, I do really want to have an investment in it, but it's just that everything keeps dropping with it. I think, and I've said this previously, I think if it was to touch the $20 range, that kind of 20 to 25, maybe that's the point where it gets me over the line. But yeah, I mean, I think this is a really interesting stock for sure. Next one's Adobe. So if it wasn't for like Google and PayPal all having massive dips, which I think I prefer a little bit more over Adobe, I'd probably bought this one on the dip, especially when it started touching like $274, $280. I think that was a really good price for Adobe. Obviously, there's a lot of negativity at the moment because it's made an acquisition and it's potentially overpaid for that acquisition. Well, it has overpaid for that acquisition. However, that doesn't take away from the products that it has, the moat that it does have, and overall, the acquisition's basically done now. And we've seen very much before that you think that a company overpays for a certain product, and you're thinking, oh, that's massively overpaid. And then within a few years, you look at the progress they make with that business, and you're like, yeah, maybe they didn't overpay for that business. It's okay. So yeah, I mean, there's questions over the acquisition they made at the moment, but I still think Adobe is such a powerhouse with the brands they do own. And yeah, I think the valuation is attractive. I think the growth will still be very good. So yeah, I mean, if it wasn't for Google and PayPal having massive dips, this would probably be the next big tech that I would have been lining up, to be honest with you. Next one's Amazon. So Amazon's probably the least attractive one to me on this list, to be honest with you. But at the end of the day, Amazon is a giant. It's basically flatlined for nearly 2 years now, and there's a few issues going on with Amazon at the moment. However, you look at Amazon. It's Amazon. People are so used to that kind of instinctively going on and ordering from Amazon now. You get all the other businesses with it. Obviously, you get the Amazon Web Services with it. And Amazon will carry on reinventing themselves, and the service they do have will continue to grow. I mean, historically, it might not grow at them rates that it's done previously, but it's Amazon, And I think that there's a few times I've been looking at Amazon and I've just not got over the line, because I do think like it's still a little bit of a richer valuation compared to something like Adobe or PayPal or Google. But there's quite a few times where I've gone, this is a very intriguing dip on Amazon. I've got to consider it, but I've never got across the line with it. But I would not blame anyone right now for taking the opportunity in Amazon, because I do think it's an attractive opportunity. I think for me, I've just got to the point where I've got to focus on a select few stocks, and I've prioritized PayPal and Google over it. But yeah, I think this is definitely an interesting one. The last one on this list is Airbnb. So I've been tracking this one since its IPO. And actually, when you look at its IPO, I mean, it's obviously down since that period of time, 20% basically. But to be fair, to say that it IPO'd, and this has actually held up quite well when you look at the other kind of growth stocks, I would say, or any other stock in general, this has actually held up really, really well. So that's quite impressive, to be fair. So not done much since its IPO, but at the same time, it's not really followed the market either and gone down a fair amount. Now, it does trade at 60 times earnings because the profit on the business has really started to ramp up. They're basically, in this period of time, Airbnb panicked and they went, okay, we've got to stop spending what we are spending. They did force them very much into good amounts of profitability. They took a bit of debt on, but however, they've not really used that debt. And they've had a bit of a rebranding really since the CV situation where they've gone, right, time to focus more on profitability. And that's been working. They've been growing at good rates. You can see here the recent quarter, they came off a 57% year-over-year growth. Net income, 655% growth year-over-year, which is amazing. And that's the focus on profitability there. And it's now down at 60 times earnings, which you'd look at a company like Airbnb, very much, the growth rates they are growing at, the potential they have going forward, you'd think, okay, this actually might be worth looking into. Now, I actually had a bit of a look onto Airbnb. I think once again, it was actually I think this was mentioned on one of the stock request videos. And I thought, you know what, it's about time I have a look on Airbnb because the business really does intrigue me. However, what really disappointed me with this one is that we're going to go from this year 38% year-over-year growth, which is fantastic. I can justify paying up a company that's trading at 60 times earnings if you're going to reward me with 38% year-over-year growth. I thought, yeah, that's fair enough. However, what was disappointing is to see that the next year growth, from analyst point of view, was to be 15%. Now, for me, I look at a business like Airbnb and I go, fantastic business. However, I look at this and going, does it justify me paying up 60 times earnings for a business that's going to go from 80% year-over-year growth down to 15% year-over-year growth? Like, what point do I cut my risk to reward off? And I thought that's probably it. I generally, in my head, without looking at analyst forecasts, I would think that Airbnb would walk away next year with a 20%, maybe a little higher, 20% revenue growth year. I would say more growth, lead that down to profitability. That valuation drops more and more. You can justify paying for that higher valuation then. However, looking at that lower growth, I was like, it's just a little bit disappointing. That's just the point where I go, that doesn't justify me kind of paying that premium for that stock. So unfortunately, that's where I was at with Airbnb. It's a stock that I love. I can delivery of financials this year, good amounts of profit this year. However, my cut-off point was just that, and I'll have to look at Airbnb. I'll have to look at what they actually do going into next year, 2023. If they're actually delivering higher growth than this, more in that 20% range, then I'll reassess it and go, okay, they're actually growing at a lot premium rate now. I'm willing to pay that premium a bit more. However, at the moment, it just doesn't have what I would like for me to be taking on this valuation. Either, like I said, it needs to grow more, or the stock needs to come, a bit more down into that kind of $80 range, and then I'd say that's probably a bit more of an attractive valuation for me. So yeah, those are the stocks on the moment that I'm watching. I'd rate them in the order of that. Lovesac was probably number one for me. I really think about every week about buying this stock. We've got Fiverr that I'd say is probably number two. I then follow that up by Adobe, then Amazon, then Airbnb. So those are the 5 stocks I'm watching at the moment, and are probably the closest ones that I am to buying. Let me know the 5 stocks that you don't own, but are very close to buying as well. I always like hearing your thoughts in the comment section as well, guys. But yeah, hit the like button. If you're new, subscribe. Have a good weekend. If you're on the Patreon, I will drop one more video, which will be the stock request video for you guys, so keep an eye out for that. But apart from that, I'll see you on Monday more than likely. I was thinking about maybe doing a video talking about like some macro events that happen this week, but I don't know if that will interest people. So I might do it, we'll see. If not, I'll see you on Monday for sure. So yeah, catch you in a bit.